Hello, friends. So we have seen some weakness in AI trade, right? And this had nothing to do with this Iran and United States conflict. That certainly can make the market move in either direction, depending upon what President Trump tweets. But regardless of this conflict, we have seen some weakness in AI trade over the last 1 month, especially in memory. And there are a lot of reasons for that, why we have seen that, right? Because it used to be, at least for the United States investor, we only had primary one choice, Micron. But now those choices are increasing. We got SK Hynix that is now trading on the US stock exchange. And then we have a Chinese memory, which will be trading on the US stock exchange. I want to say this week, maybe next week, but it's coming soon as well. So, so we have more options. So that can create a little bit of money rotation between different places. Like, for example, if you're bullish on memory, you might say, well, why stick with one company? I want to be a little bit more diversified. So I'm going to go, move into different companies and so forth. So I don't think, all the sell off that you're seeing is certainly has some impact because of Iran, but a majority of it has other fundamental reasons. So today, break them down and let's try to understand where are the opportunities. Should we get into SK Hynix, or should we build up a position of Micron, or maybe it's the other way around. Maybe we have arrived at a peak of capex cycle and maybe things go downhill from now. And that is what market is telling us. So I had a discussion call with my group yesterday, and I think we debated this for almost an hour and a half. A lot of different angles because the people in my group are super smart people. Many of them already work in AI trade, so they understand this industry very well. Certainly better than me. I look at market from a business point of view, but these people understand what's happening in the nitty gritty. What kind of models are out there and how these models are being used in different companies. What kind of token prices are for different model. I mean, these people are really into that kind of stuff. I don't need all that information to make my judgment calls because I'm not an analyst. I don't need to produce a report to give to clients or anything like that. I look at a simple business cycle and then I stay with that business cycle until it has matured enough and then move on to the next business cycle. That's the way I do my investments. But the question that we got to ask right now is, why all this sell off? Like we had a great earnings, for example, from Samsung, from SK Hynix, and as well as from Micron. So all of these companies did so great. So why the sell off right now? Is the market telling us this trade is over, or something else underneath the surface that we should figure out? So I'll share my thoughts on that with you guys openly so you guys have that. But in return, I have to ask you for a favor. Don't make it look like I'm talking to myself. Please leave it in a comment. Let me know what you guys think, whether you agree or disagree. Share your thoughts around it so that way we can enhance this conversation. All right. So, in my opinion, I think market is trying to figure out three things. Number one, market is trying to figure out, well, is this trade too hot? Sometimes things sell off for one primary reason, which is that it has gone up too high, too fast. So market is saying, and when I say market, that means, market is made up of people like you and me. That means there are enough people in the market right now who are thinking that this trade has gotten so hot that we are better off shorting it or at least stay away from it. Let's ignore the fundamental. Let's ignore the demand. Let's ignore all that. And let's just stick with that one argument. So that is one reason. So people want to wait and see whether that is true or not. Nobody knows the answer, but we get the answer as things kind of move on. Time gives us the answer, so people are waiting. Okay. Second question we are asking ourselves is the earnings estimate. So you guys know that for 2026, analysts are expecting that earnings are going to grow 24%. That's a huge number. 24% earnings growth in 1 year. We haven't seen that kind of growth in many, many years. So that creates two problems. Number one problem is there are a lot of people who are still sitting on the sideline. And I know that because I talk to them, right, during my consultations and stuff like that. People tell me some people are bearish on the market, some people are bullish on the market. But I can tell you from my experience as I talk to clients is that there are enough people in the market who are bearish and they think that these earnings expectations are fake and most likely market not going to do that well. Market is expecting 25%, but what happens if the earning growth is only 15%? And if that happens, then ETF starts selling off because we have more ETFs in the United States now than we have publicly traded companies. So obviously people start selling off those ETFs. And when they sell ETFs, then when you sell an ETF, ETFs don't think what is a good company, bad company. They sell everything in a bucket. So that can create a pressure. So I think that's a second thing that market is trying to figure out. Then there are trades in the market where market doesn't really know what the demand and supply cycle balance is going to look like. Networking trade, optical trade, these photonics stocks you probably have seen, space related stocks, memory is a great example, Micron, Samsung, SK Hynix. These stocks, the supply and demand dynamics, nobody really knows. So because market doesn't know, that means market is cautious. By the way, which is a great thing. Bad things happen when market is not cautious. Like, for example, I was looking at SK Hynix selling off. That's a good thing. It should sell off. What it does is it brings in more and more long-term investors. It brings in institutions that want to buy that company and hold it for a long period of time. And it lets the traders out, the people who have made the quick money, they're not in there for a longer period of time. It gives them an opportunity to exit. So it's a very good, healthy balance. So I like that. So market is really trying to figure out, well, we don't know what PE should we give to these companies. Now, I can't talk about every single company, but let's just talk about memory trade for a second. Like, for example, Micron, SK Hynix. Samsung is not really a direct memory play because they make so much. So I'm going to leave Samsung out from the picture. But these two, and in these two, even, for example, SK Hynix is very much focused on high bandwidth memory, which is what you use in data centers. This is what NVIDIA use. Micron certainly is moving towards that as well. But Micron make all kind of memory, but they're certainly focusing more on HBM right now. So those two are probably your great companies. So SK Hynix obviously is now trading in US stock market. So a lot of people who own Micron stock before, they probably thought that, hey, maybe I should sell off some of my Micron and move into SK Hynix. We also have one more vendor coming to the market. I want to say this week, if not this week, maybe next week. It's a Chinese memory maker. So they are coming into the market as well. And that is going to create a little bit of a turbulence in the market as well. So that is what's happening with the money moving around within the memory trade. But the real question is, well, for how long memory price is going to remain high? Are we reaching that peak right now? So we don't know the answer to that. And we are getting bits and pieces of information. For example, if you listen to Sanjay Malhotra of Micron, what does he say? He says, well, I can tell you that we're not going to have any meaningful supply of memory till next year. Then next thing we know is that they are signing 5-year contracts with multiple vendors. I think the most recent one was Ford. And this Ford one was after their last ER, where they already said that they have 16 long-term contracts. When I say long-term, we're talking about 5 years here. So, I mean, why are companies signing up 5-year contracts if they're going to be meaningful supply next year? Doesn't make any sense. Why is Apple talking about raising prices if memory price is going to come down next year? So you see the conflict there in the statement. And then on top of that, Micron is spending $250 billion. So if supply is going to meet demand next year, why are you spending $250 billion? It's not like you spend $250 billion and all of these projects are going to be completed in 1 year. They're probably going to take 4 or 5 years to get there. So why are we spending that money right now? So if I really analyze it, it tells me that most likely, based on the current information, this memory cycle is there for next 4 or 5 years. Another clue that we get for this is from SK Hynix. If you listen to their CEO, he said he doesn't think they're going to be meaningful supply till 2030, which kind of aligns with this 5-year cycle right now. And if this is true, if this is true, that means this memory cycle is really 5 years. Then the question comes is what kind of PE we should give to these companies? Should there be PE of 5, 6, 7, 8, 9, 10, 15, 20? What does that PE looks like? Market doesn't know the answer to that question. So that's why they're waiting to see what kind of guidance hyperscalers are going to give us this quarter. So they're waiting for these companies to come out and tell us how much more are they going to spend. That will kind of give us more clarity, showing us what kind of demand there is for HBM and what kind of other supply shortage might be out there. So this is what market is actually looking for. So you want to pay attention to earnings from Microsoft, Amazon, Google, and Meta. So these are the four major spenders. There are a lot of other companies out there, and I've talked about more in another video where we discuss Micron in great detail. There are a lot of other sectors where demand is coming from, but generally speaking, most people don't really look at all of those other sectors. They kind of focus on hyperscalers. So most investors want confirmation that this cycle is continuing. And if this cycle is continuing, then you're going to see a big jump, kind of like what we saw in last quarter. So I wouldn't be surprised, for example, Micron jumped from $1,000 stock to $1,500 by the time the ER comes out, and after that, it might consolidate for a little bit. So I think last time the ER came out, the stock hit 1,200. This time maybe 1,500, 1,600, and then it comes back down to 1,200, 1,300, and then we kind of move on. So this cycle will continue to grow because each time market would want some evidence that this trade is going to continue to build. And I don't blame market for that. Basically, what investors are asking now is that, we understand that there's a lot of growth in AI. We get that. But the question is, are we manufacturing too much? Are we increasing capacity too much? We kind of saw this with Meta, right? Where Meta came out and said that we're going to sell access capacity. That kind of fluked the market out a little bit. That what are you talking about, access capacity? And companies like memory, for example, Micron, Samsung, all these guys, they invest heavily in fabs. So those are very expensive, facilities, and you spend that kind of money. Then the question comes is, are they going to be able to recoup that investment? Are there going to be enough demand going forward? Are we over creating the supply? What happens if this trade kind of cools down? Will companies like Micron will still have pricing power? Would they be able to keep higher gross margins? So all of those questions are all valid questions, and market is trying to figure it out. Now, SK Hynix, you probably saw, I think, drop another 10%, 12 today after the Iran conflict. That one is creating a lot of turbulence in the market as well right now, right? So SK Hynix, they listed the ADR of their shares here in the United States. And hedge funds are always looking for a quick opportunity. And if you missed out of it, don't get super excited or try to figure out how to do it next time, because it's very hard to do. Hedge fund managers have a team, staff, they are positioned to this kind of stuff. So these opportunities are there, but they quickly kind of disappear because there are people who are able to act fast on them. So what these people did was they shorted the ADR in the United States. Okay, so now, after the ADR goes live, SK Hynix trades in two markets, right? They're trading in South Korea, and now it's trading in United States. In Korea, obviously, it trades in a local currency, versus in the United States, it trades in dollar. So let's just say the Korean share price happened to be 300,000 in their rate, and the exchange rate is 1,500. So the fair ADR price will be 200. I'm just making up the number for a second. And let's just say some news comes out, and all of a sudden, because of that news, the ADR becomes more expensive. Okay, nothing really changed with SK Hynix business, but the market, because there are two different time zones, the information kind of flows a little bit differently between the two markets. It will always create some sort of imbalance in price between those two markets. And when that happens, hedge funds going to be thinking that, hey, the United States ADR is more expensive or overpriced compared to the Korean shares. So what can they do? Well, they can sell or short the expensive ADR, which means the US version, and then they can buy the cheaper Korean version. So they can make a quick 10, 15% on that trade. But that doesn't really last a whole long. It maybe for a day or two. If the news cycle continues, maybe a week or so, and then everything kind of balances out over time. So these are some of the dynamics that are really playing out in the market that you want to pay attention to. Me personally speaking, I'm not a trader, I'm buy and hold. So I kind of wait until I see some material fact that is changing with the AI trade or memory trade. That is when I'm going to decide to move out of it. For now, I'm staying put. If you ask me, do I want to own Micron versus SK Hynix and all that? Honestly speaking, it makes sense to own multiple companies because you're de-risking yourself, right? You're not having that one concentration risk. But if I do want concentration, then I would probably stick with Micron or SK Hynix. So both answers are actually right answers. Each one of them gives you a different set of risk. So you're okay. I think Micron had a lot of advantages over SK Hynix, right? Micron is a US company. They have deal with President Trump. They also benefit from tax benefits in the United States. And then they can easily raise capital. Not that they need to, but they could if they wanted to. So they have a lot of advantages compared to other stocks out there. But reality is, if this super cycle of memory is there for the next 4 or 5 years, then it doesn't really matter. I think even the Chinese version of memory going to do just fine. Obviously, that's not going to be sold here in the United States, but still, I'm talking about financially. Most likely, it's going to do just fine. So those are the things that I'm paying attention to. Really, at the end of the day, what matters right now is what kind of guidance we're going to get out of hyperscalers. So that's the next catalyst that I'm waiting for. So if I want to make any decision, it's going to be based around that. All right. So I hope this information is helpful. And if I can be of any help to you, you can reach out to me via taxcodeadvisors.com. See you guys.